Bloomberg Audio Studios.
Podcasts, radio, news.
You're listening to Bloomberg Businessweek with Massar and Tim Stenovec on Bloomberg Radio.
When you're thinking about inflation and how much it has strained consumers' finances in recent years, it's also affecting charities that depend on donations for their philanthropic work. In a new study from Wells Fargo on Giving in America Today that analyzed consumers' feelings on charitable giving, 3/4 of Americans say that generosity is a part of their core values, though half feel like they don't have enough money to give. Although giving remains steady for most, nearly a third are donating less this past year. So what exactly gives, Tim? And as the calendar nears 2025, can a new incoming administration in Washington change those feelings in anticipation of favorable tax policies? So here to unpack this survey for us is Stephanie Buckley, Head of Trust and Philanthropic Services at Wells Fargo, joining us from Los Angeles. Thanks so much, Stephanie, for being here with us. Walk us through sort of this latest report, and why is it that you're starting to see not even just, inflation that, especially over the past few years, that had weighed on consumers, but you're also seeing it in particular corners of the market when it comes to charities and those donations?
Absolutely. Our survey result was very interesting. I was interested to see what was going on. And as you noted, roughly 29% gave less. But yet 78%, again, as you noted, have generosity as one of their core values. So it's an interesting mix. And in terms of the inflation that we're seeing, a lot of it is, if you think about it, like if you go to the grocery store for $100, I used to be able to get a whole basket of groceries coming out. Now maybe I get a bag of groceries. And I think people are really feeling that pinch. And so that is carrying over into the philanthropic world. And that's what we're seeing.
Is it going into the philanthropic world this year in a different way than last year? I mean, by pretty much every measure, inflation has eased from where it was a year ago, and of course where it was 2 years ago.
Yes, but what we're seeing and what we're seeing with our clients in particular is yes, it's easing a bit, but they're not feeling that it's easing enough that they have a lot of extra funds to give. And that's what the survey was showing, is that people just don't feel like they have the extra. But the other side of it is they still feel that tug, that pull to give to charity and to help others who are in need. And so the surveys showed that core value, most of them still have the core value of generosity. And we even saw some who, what we call the sacrificial giving, who will say, I'm going to defer my own needs to help others who may be in a worse situation than I am.
So when it comes to different types of tax policies, I know a lot of people want to point to that as potentially something that could help out this situation, but walk us through kind of the difficulties there and what would need to happen in order to see that help charitable giving, because there's a lot of different types of things when it comes to deductions that are a little bit more convoluted, not as easy to decipher.
Yeah, that's a great question. What we're seeing is, with the past tax changes, the standard deduction went up significantly. And what that meant is that less people are itemizing their deduction. And for gifts to charities, that's an itemized deduction. So for some people, they feel like, well, if I'm not going to get that extra tax benefit, and maybe I don't feel like I have a lot of extra money, I'm not going to give. But for those who are itemizing, that is a big lever that they can use, because essentially that charitable gifting, if they are itemizing their deductions, whatever they give to charity is going to proportionally reduce some of their taxes. And so we are seeing that, and that was a big thing that came out when the standard deduction raised significantly. And as we know, with the current incoming administration, they were the ones that did that big jump in the standard deduction. So likely it's going to maintain. And for charities, that shift was focusing on their larger donors who are itemizing. And those donors who give, maybe it's the $10, the $100, the $1,000 amounts, which might seem small, but honestly for charities, that is a significant lifeblood for them to get those smaller amounts, because those smaller amounts over a large amount of people do add up for them. So it is important for all levels of donors that give to charity to continue to give to support the charities that are doing the important work.
Stephanie, I'm wondering if your survey accounted for income level or net worth level in terms of people who gave, and what you can tell us about how giving changes across income spectrums, like as a proportion of how much money people have, how much they give?
No, again, when it comes to giving, interestingly enough, what studies historically have shown, not just the Wells Fargo study, but those at the lower income levels often give a higher percentage of their assets. And the other piece too that I think is important to talk about in terms of giving, it's not just giving money, right? So we call it the treasures, the 5 T's. It's also giving time. It's also giving of your expertise. It's giving, in addition to the treasure, it's giving testimony. It's the actual service. And so part of it, what I think is important when we talk about philanthropy is to broaden the conversation beyond just the treasure in the 5 T's. It's to broaden it to all sorts of aspects. And when you are that inclusive, what we find is those who are at the lower income levels typically give more to society than those who are at the higher, in terms of like a percentage of assets.
So how are the demographics of donors shifting?
Well, again, as I mentioned before, if we're talking about what usually the measurable piece of it is the treasure, right? We can measure how much people are giving based on tax returns or what charities are reporting that they received for donations in a particular year. And so again, with the higher standard deduction, as I mentioned before, what we're measuring the treasure amount is those who are in the higher income, who have the ability to overcome the hurdle of the standard deduction, are giving more. They're becoming the larger base of donors for a lot of charities. And charities we are seeing that in the giving numbers. And as part of that, they are also looking at those who, like I said before, give those lower amounts, and those amounts are critical. So I think the important part for people to realize is, maybe you're not getting the benefit of the deduction, but the charities still need those gifts. You say, well, $10, what is that going to do? It actually does a lot, especially when it's multiplied across a larger group of people who are giving.
So let's look forward to 2025 and how you and the team at Wells Fargo are thinking about a new administration when it comes to charitable giving. We know a big part of the priorities of the incoming Trump administration is to extend the Tax Cuts and Jobs Act when it does expire next year. How did that shift? I believe it was 2017. How did that change charitable giving in the first administration based on previously because of rules about deduction and those sorts of things?
Yep. In some ways, as I've said before, it's changed who is giving, but in other ways, I think it also has encouraged those who maybe are not in agreement with the administration to really give to support the causes that are important to them. So one of the things we're seeing is, for example, maybe women's rights. A lot of people are rising up and saying, you know what, that is important to me, and I want to give to that cause. So in other ways where they might not have been as encouraged to do it before, they're really focusing on that. And that's another note too that I think is important to be aware of, is that a lot of people want to be able to be strategic with their philanthropy. They want to be able to say like, hey, whatever I'm giving here is really making a difference. And so as part of that, it's important for people to think about, maybe just not what we call spreading pockets of sunshine here and there, but to say, how much do I have in my budget to give to philanthropy or to give to the charities I want to support this year, and to focus a good portion on those particular causes where they know that giving a larger amount can get a bigger impact for what's truly important to them.
Stephanie Buckley, head of Trust Philanthropic Services at Wells Fargo, joining us this afternoon. All right, well, looking at shares of Hewlett-Packard Enterprise, kind of jumping all over the place, higher by about 1.6% right now in the after hours. The company did report better than expected quarterly revenue and a jump in sales of servers to power AI work. We've got with us right now Crawford Del Pret, president over at IDC, joining us here in the Bloomberg Interactive Brokers studio. Welcome back, Crawford. You've had a chance to dive into these numbers a little bit. What sticks out to you?
Yeah, so great to see you guys. Thanks for having me. So look, this is a record revenue quarter for HPE, and I think it's indicative of a number of things. It's indicative of this extraordinary server and storage growth that we're seeing. So, just for context, the server business was a single-digit growth business for multiple years. IDC overall, we forecast, wait for it, 37% growth in servers and storage this year in dollars. Okay, so what's driving that? It's an architectural shift to AI, right? And we are seeing that service providers and then ultimately enterprises will need to upgrade their infrastructure to support these new, what we call AI workloads.
So especially because when you hear AI, you always think of maybe companies like an NVIDIA, maybe not as sexy as a name quite like this, but when it comes to especially sort of the IT spending side of things, with HPE as well as some of its other competitors, who do you think can really benefit from this beyond, say, when we're talking about other type of chip type, semiconductor type stocks? Yeah,
so when you start looking at what's happening with AI, and this is what you're seeing in HPE's numbers, is that you have to upgrade your overall infrastructure. So that means that companies like HPE are benefiting, companies like Dell are benefiting. You're seeing also, ultimately, you'll see the software stack associated with managing your infrastructure. Ultimately, your applications will benefit, but that's gonna take a longer period of time. But in the near term, beyond the NVIDIA, you're seeing that the entire infrastructure stack needs to get upgraded. Now, let's just get back to HPE for a second. What's also happening at HPE is that a number of years ago, they went on a diversification strategy. They bought a company called Aruba Networks, and Aruba Networks expanded their footprint in the enterprise. So last quarter, HPE had a tougher reaction from Wall Street because they saw their gross margins dip. They saw them dip again, but that was really related to a slowdown and a stall in the enterprise infrastructure space in Aruba Networks, what we call the edge of the network, the wireless infrastructure. And as that infrastructure now is working through its inventory, HP saw a sequential increase in that business, even though it's still down 20% year over year. Sequentially, that business is starting to stabilize, and their gross margins will start to have started to stabilize as well, although, like I said, they were down about 400 bips. Now, I think going forward, what you're seeing at the company is, and you're seeing this at other companies as well, like Dell, that the demand is just sustained for infrastructure, and the demand for, in HPE's case, the demand for infrastructure around the network will likely increase. Now, don't forget, they announced that they have their intent to acquire Juniper Networks. That will add their ability to get the service provider side of the network, and they expect to close that deal sometime in early 25. So it's a very interesting story as this company is really reinventing itself and is seeing the benefit of that reinvention in their numbers.
What's it trying to leave behind?
So what it's trying to leave behind is running on that x86 Intel treadmill of commoditization, right? HPE sat back a number of years ago and said, where are the largest profit pools that we can prosecute in the enterprise? Networking hit the top of the list. That's why they went after Aruba. Software, that's why they brought out things like Esmeralda. Storage, that's why and by the way, Dell bought EMC, right? Yeah. In the case of HPE, they brought out Alletra, which is their new storage platform. Now they're looking at networking and saying, well, there's also this service provider networking, this really high capacity, high bandwidth networking. Juniper adds that. So what they're trying to do is they're basically the gravitational force of commoditization is what they're trying to leave behind.
Jess Minton and Tim Stenovec here in the Bloomberg Interactive Brokers studio. We're actually back with Crawford Del Pret, president at IDC International Data Corp, joining us in the Bloomberg Interactive Brokers studio once again. And so we were just speaking, Crawford, about obviously HPE posting higher than expected fourth quarter revenue due to that continuing AI demand, and looking at that stock HPE and after hours trading up close to 2%. But another stock I wanted to point out that a lot of attention is given to is Supermicro, SMCI. Now, at a certain point, it was one of the worst performing stocks in the S&P 500 this year just because of those questions surrounding its accounting practices. Though if you look year to date, it's recovered some of those losses and it's actually up around 45%. You were talking about kind of the exposure when it comes to service providers. If you're thinking about like Meta, Salesforce, Microsoft, SMCI doesn't exactly have the same kind of broad reach that some of its competitors do. When it comes to a company like this, and especially some of the accounting news that has come past, how do you make of this and its stock performance so far?
Yeah, so when you look at Supermicro, it's a fascinating company because where an HPE or a Dell or a Lenovo sells a broad range of products that address the needs of many, many different kinds of enterprises and also service providers. Certainly, Supermicro has a range of products, but really what they do is a significant amount of engineering and innovation, really for what we call ultra-dense service provider applications. And so, you're a hyperscaler, so you're a Microsoft, or you're a Meta, or you're a Google. Supermicro is going to do that really, really tight engineering between the components, as well between component suppliers, as well as the actual physical box, and bring that box out and allow you to have a very very dense environment. The downside of that is that they don't have the same distribution channel. They don't have the same reach that you would see at a Lenovo or at a Dell. So the concentration of customers is very, very high.
Oh, it's incredible. You go to this, the concentration of customers, the concentration of who they're buying from.
Both.
Okay.
Yeah, both.
Because they see that on both. It's pretty remarkable. They're a huge customer of NVIDIA.
Yeah, oh, absolutely.
It's like they're one of the top customers there.
So think about the AI, and actually this is a great metaphor. Think about the AI kind of market right now as an upside down triangle. At the top of the triangle are the service providers, and that's where the majority of your demand is coming from. That's the animal that's eating all the NVIDIA processors right now. And
so that's the Microsofts and the Amazons.
That's the hyperscalers, the Microsofts, the Amazons, the Salesforces, the Metas. And as that triangle comes down, it gets narrower and narrower because the enterprise customers haven't really stepped up and bought into generative AI in the same way within their data centers.
Is that, but if they do it, wouldn't they just go to a hyperscaler?
Well, that's just it.
Rather than doing it on-prem?
Potentially. But what we see a lot of customers, I'm not saying this is a customer, but a customer like a JP Morgan or someone like that, who have a significant investment in custom applications. And those custom applications, they want to be able to take those data stores that they're creating in their custom applications. Those are in their own data centers, and they will ultimately want to train their own large language models and have their custom applications be able to use those large language models to be able to get generative AI answers to serve their customers and their employees in new ways. That is when the bottom of the pyramid starts to get wider, because then enterprises start buying into this technology. But we're not there yet. Where we are is the top is what's consuming the vast majority of these processors. And what's interesting about generative AI is that usually with these compute architectures, it becomes a law of diminishing returns, where the performance starts to tap out no matter how much capacity you throw at it. We haven't seen that yet with generative AI. You can keep throwing processing capacity at it, and the system gets more and more and more capable, and you can also get significant speed gains.
Yeah, one of my favorite functions in the terminal is SPLC, so you get to see the supply chains. I'm sure that's what Tim may have been looking at too. You can see their customers and suppliers.
Yes, that's what I was looking at.
But just for our radio listeners so that they know, so you can get a gauge there. So Supermicro has been in the S&P 500 for less than a year. It got added.
This time,
this time, right? It got added toward the end of the first quarter back in March. So, I mean, what do you make of kind of like what's next here after it's trying to get over this hurdle with the accounting issues?
Yeah, again, at IDC, we don't pick stocks, but I will tell you that from a performance standpoint, there is such a significant amount of engineering and so much a significant amount of demand within that company. I believe that in the long term, they are going to continue to benefit from this AI boom, particularly as service providers continue to invest. So, take that with what you will, but I don't see a world where Supermicro is not continuing to participate in this market.
Okay, Crawford, I'm going to go off script a little bit.
Sure.
Because I want to get your take on this. You're in Boston, is where you're based?
Absolutely.
Okay, you spent a lot of time in the Bay Area?
Uh-huh.
Have you taken a Waymo?
I have not taken a Waymo, but I have crossed the street in front of one.
And it didn't hit you?
It didn't hit.
Okay, you're still here today. All right, that's what I like to see.
Yeah.
Here's why I ask. I was out in San Francisco a few weeks ago. Now anyone can take these Waymos.
Yep.
You don't have to be on a list anymore. I downloaded the app.
And you can go further, right?
I was only able to go within San Francisco. That's all I needed to do. I know they're training them. Yeah, they're training them to go to the airport now. You can't get on the highway with them yet.
Yep.
It blew my mind. Mm-hmm. It was incredible. I was a skeptic. I'm totally sold now after this 28-minute trip. Where do the companies that you cover, just in the last minute that we have, where do the companies that you cover play in that space? Like if we're working toward a world where these are going to be all over, how do the companies that you cover benefit?
Boy, there's a number of ways, and it also blew my mind. One of my team members sent me a video of her in a Waymo, and the thing is bananas. It's driving itself around. A lot of ways. So companies think of a driverless vehicle as a little data center, a little smart connected node on the network. It has its own network inside of it, and it's obviously consuming a lot of processing power from the network. But what's different about a self-driving vehicle is the amount of processing it needs to do. We call this compute at the edge of the network, because it has to decide very, very rapidly, is that a human, is that a mailbox, is that a dog, is that a shadow? And it has to be it can't compute that at the core of the network. It's got to compute it at the edge. So the kinds of companies that benefit from that is, surprise, NVIDIA, where they've been a key partner to FSD, full self-driving at Tesla for quite some time. Also, over time, maybe companies people don't think as much about, Samsung. So they're going to be making a lot of the semiconductor content, as well as the LED technology, where you see these cars become big curved displays over time.
We've got a bit more time with you, and when we were chatting just now before we did some news, we were talking about driverless cars, and I'm curious about, you haven't had the chance to ride in one. Some of your employees have, you mentioned. I was saying that I rode in one in San Francisco a few weeks ago. Anyone listening or watching right now knows that, because they can't stop talking about it.
Was it a Jag? It was
a Jaguar, yeah. It was an electric Jaguar. It was totally clean. I got in, you can choose the music. I was FaceTiming with my parents to show how cool this was. But I was so skeptical of the technology before, and now that I was able to experience it, it was just absolutely remarkable. And I do envision a world where we see auto accidents just plummet as a result of technology such as this. Am I dreaming, or is that something that happens in our lifetime?
No, I don't think you're dreaming. I think it does fall in the category of the old Paul Sappho from Stanford phrase of "Don't confuse a clear view with a short distance." Right?
Okay. He's a futurist.
Yeah, he's a futurist, and I think we are going to get there. But I think we're going to go through kind of an icky period, and that period is where the self-driving cars don't make mistakes, but the humans do. And I think that's going to have really tough impact on things like insurance, and it's going to make it potentially more expensive, and that may actually get to a point where people start to say, do I want to be the person not using self-driving, because it costs a lot for me to get in this vehicle and use this vehicle, because the risk that I may be distracted by doing something, looking at a phone, having a bad day, whatever, the car never has that. So I think eventually we will get there, but it's going to take us probably longer than people think, because roads are complicated. What's not going to, and they're complicated all over the world, and self-driving in Rome, gives me a headache. But I think that we are very close to being able to see it on highways, being able to see it on in a lot of U.S. cities and in a lot of North American cities, and I think we're probably it's probably closer than people think. I think it's probably in the next 5 years, you're probably going to start to see more and more modes. More and more companies bringing out the kind of technology that Tesla can bring out, where you've got one hand on the steering wheel, but really, if you want to go pretty full self-driving, you can.
I've actually never been in a Waymo or anything like this.
You're not the only one. There are only a few cities where they do this. They do it in Austin. They do it in Phoenix. There was a story about Miami today.
Of course, San Francisco.
Yeah, in San Francisco.
So when you're thinking about legislation coming out of Washington, obviously we have a new administration coming in, but kind of realistically over the course of years, because this will take a while, as you were mentioning, what do you think would need to happen? Because also you were talking about the complications of roads and depending on what type of city you're in. Yeah,
so there's going to be a lot of legislation that's going to need to be addressed here, which is why I think it's going to take a long time, much longer than the 5 years I mentioned, for full self-driving. But the kind of assist where what Tesla has today is really only what Tesla has, where you have a couple fingers on the steering wheel and the car is doing the vast majority of the driving. That's going to go to multiple manufacturers.
What I was in was full self-driving. I wasn't even in the.
Yeah. So what you were in is going to take a lot longer from a legislation standpoint, where we're going to have to see again, this is going to get complicated because are states comfortable with it? Is the federal government going across? If you want to go across state lines, states have to have agreements, and if states don't have agreements, then it becomes a federal issue. And I think that could take a lot longer than the technology could take.
It's also hard from a rules perspective, and I mean rules in the sense of like rules of the road. Mm-hmm. For example, I had to drive recently, and I was driving my car in New York City, and there was a car double parked in front of me, so I couldn't get around it. In order to get around it, I had to actually go over a double yellow line. There were no cars coming.
Right.
But what I did was not considered following the rules in the sense of like if a computer, like I don't know if a computer would actually do that. If I were in a self-driving car, would I have just sat there?
Would you have just sat there and been frustrated because it's an obvious solution that's not going to harm anybody,
right.
And it's the kind of thing you could do potentially. And now those kinds of things those kinds of conditions can be programmed in, but probably not for a long time. I'll give you another example. What about the example where people start to figure out where the vulnerabilities are in these vehicles? So if you want to see I'm making this up, but if you want to see the vehicle behave in maybe a strange way, come up very close to the back corner of it, or you have to figure out.
So sort of bad actors?
Yeah, not necessarily bad actors, but just people that try to figure out where the vulnerabilities are so that they can get around them faster potentially, or try to game the system in some way when you're a driver and you're driving sort of against, if you will, a full self-driving vehicle.
Looks like Alphabet's robotaxi service is going to launch in Miami in 2026. So
Look
maybe
at that.
that's go down there. Next time in Texas, go to
More
Austin.
and more of these cropping up.
I'm just waiting for New York.
That's right. How complicated is that? Like, will we ever see that? Like, I mean,
New York,
it seems very
you
extremely complicated.
start getting out into some of those boroughs. You start getting downtown.
Yeah.
It starts to get a little bit complicated. But I would say I don't think New York is meaningfully more complicated. San Francisco can be pretty complicated as well.
Yeah, I was talking to a friend who works in tech, and he was saying New York's tough because there aren't very many legal places to pull over.
Right.
Whereas San Francisco, there are a lot of like driveways that
Right.
people can pull into to get into one of these things. But yeah, it could be complicated here.
We'll see.
Crawford, always love it when you stop by. Thanks for sticking with us for some extra
seeing
time.
you both. Thanks so much for the time.
Crawford Del Pret, president at IDC.